This is Money Talks.
Hi, my name is Ibukun Oyedeji, President CFA Society Nigeria. Join me and a host of other financial industry practitioners for Money Talks with CFA Society Nigeria.
Money Talks with CFA Society Nigeria. Let's talk about money. Hello everyone and welcome to Money Talks. Money Talks is a financial literacy program and is brought to you by CFA Society Nigeria. Smart Uzechi is my name. You can call me Captain Smart and I'll be fine. Tonight we're going to be talking about a very special topic that touches everyone and is something you would love to be part of. You can join the conversation anytime. 0700-923-923-923. That's 0700-923-923-923. You can also call us on 0814-0000-923, or you can call 0802-054-4484. You can send us messages on WhatsApp 0817-313-6193. That's 0817-313-6193. My guest on the program this evening is Kingsley Aigbe, CFA. Kingsley is an investment professional with over 18 years of experience across investment banking, corporate banking, and private equity. He has a proven track record of success in originating, structuring, and executing financial advisory, debt and equity financing mandates with a focus on Africa. Kingsley's sector expertise is wide-ranging and includes oil and gas infrastructure, telecoms, infrastructure, and financial services. He has played an integral role in high-profile M&A advisory and fundraising mandates across Africa, successfully completing deals of over $4 billion. Kingsley holds a BSc in accounting from the University of Lagos and is CFA charter holder, a chartered accountant, and holds the prestigious Advanced Financial Modeler designation. Ladies and gentlemen, let's welcome the husband of my friend, Kingsley Aigbe. Good evening to you and welcome to the program.
Thank you very much.
So good to see you.
Good to see you too.
You look good.
Thank you.
In fact, you look better than what I see on pictures.
Oh, okay.
I prefer the live Kingsley. Good to see you. Well, and you look so good. You look after yourself very well. That's very good. That's very good.
Thank you.
You're welcome. So you can also send us WhatsApp messages 0817-313-6193. That's 0817-313-6193. You can send us messages on WhatsApp, or you can send us voice notes to ask questions, make contributions, or seek for clarification. I'm sure Kingsley is well prepared to do that for you. Tonight we're discussing promoting financial inclusion. That's what we're talking about here this evening. Promoting financial inclusion. So you can send us messages at any time to be part of the program. So Kingsley, can I start by asking you, what does financial literacy mean? Because this is a financial literacy program.
Sure.
So when we say financial literacy, what does it mean? And how does that really relate to our topic today, financial inclusion?
Thank you, Pastor. So financial literacy essentially is just being equipped with, the basic skills and knowledge, in making financing and investment decisions. So it's at the basic level. It's not anything complicated. So just the way, if you can read and write, so you're literate, right? If you can add and subtract, basic mathematics. On the financing side, because we as individuals, no matter how we look at it, we cannot, distance ourselves. We make financing or financial decisions every day, right? So one must be equipped with just the basic knowledge, understanding, what interest rates mean, what an equity investment is, what a money market placing is, just basic knowledge, not necessarily anything complicated like, derivatives and all that. And it's very important because, you find, in quote, very knowledgeable people, maybe even professors or doctors in other areas, making very wrong financing decisions that affect their hard-earned wealth that they've struggled to build up for years, just because they were not financially literate. So it's very important, because if you want to tie that now to financial inclusion, with the advent of technology, we all have access to a lot of financial products. But you need some basic knowledge to be able to understand that, okay, this product is good, but it may not be for me at the moment, or it's not even a good product at all. Right? You need basic knowledge, and you find out that a lot of people are missold to, because they don't understand just basic, financial type of products. So, for instance, now I can give an example. A number of banks are in the market, trying to raise equity capital to shore up their balance sheets in line with the central bank directive that they should recapitalize. Now, people are asking, should I buy Bank X or versus Bank Y, or should I even buy at all? Again, there are so many, things that will go into, deciding on whether you should buy or which you should buy, right? But you also need to understand that, okay, what type of money do you need to put aside? It has to be long-term money. It will be improper to put your kids' school fees that you need to pay next month, right? Because I know I'm going to pay, some big money in, one equity investment or two that is up now. No matter how good it may be, no matter how, no matter how good the prospects are, it's just a mismatch, right? And these are the type of things that people need to understand. Or you're trying to know whether you should put money, in a savings account versus, trying to invest in equity. Just little things like this, or even just how to calculate interest rates. Sometimes when you go to your bank and they tell you, okay, on this placing, we will give you 7%. You also need to understand that, okay, how is it being treated? Is it compounded at the end of the year? Is it compounded monthly? Is it compounded quarterly? Those things would actually affect how you choose between. One might be saying 7% compounded monthly, another one is telling you 8% compounded annually. But if you do the math, maybe the 7% compounded monthly might actually have a better or higher effective yield. So it's very important that we push financial literacy, because really without financial literacy, in our numbers in terms of financial inclusion, wouldn't really improve. Because yes, we have access to, especially those of us in the urban areas, we have access to the products, but we need to understand what we're getting into.
Absolutely. And Kingsley, so why is financial literacy then considered a foundational element of financial inclusion?
Good question, and it's really the bedrock for accessing all these financial products. When we talk about financial inclusion, we tend to just look at access to a bank account, and that's it. But it goes beyond that, and even access to a bank account, requires some financial literacy to understand, okay, how much of my earnings should I just leave in my regular current account? How much of that should I put, in savings account? And even on the loan side, there are a lot of people that need access to, financing SMEs, to finance the businesses. We have a lot of, they call themselves, payday loan companies or fintech companies, offering different loan products. They give you a certain rate, but effectively it's way more than that, right? So you need to have just the knowledge to understand that, okay, if they're telling you the interest rate is 10% monthly, for example, and you want to borrow for 12 months, you need to understand that effectively it's not 10% times 12, because it's compounded monthly, so it's effectively more than 120%. Would you ordinarily be walking into a loan at that type of rate? Again, it's left for you to know, but you can't just take things at face value. And even those that would claim they might not have access to financial services, the basic, even if it's just a regular account, right, a savings account, for instance, right, the banks will quote savings rate, and you should be able to interpret that, okay, what that 4% means per annum. Does it mean you get 4% at the end of the year, or will it be compound? Will you get it every month, or are there clauses there that would mean that you might not earn anything? Stuff like that. And that's why financial literacy essentially provides that, bedrock, to drive financial inclusion to the type of numbers we need.
In case you're joining us now, Money Talks is on your radio and it's brought to you by CFA Society Nigeria. Captain Smart is right here. My guest today is Kingsley Aigbe, CFA, and we're discussing promoting financial inclusion. If you have a question or you have a clarification to make, perhaps you want to make a contribution, you can call the telephone number 0700 923 923 923. That's 0700 923 923 923, or you can call us on 0802 054 4484. That's 0802 054 4484, or just send us a message on WhatsApp. You can also record a voice note and send to us to the WhatsApp number 0817 313 6193. As we await your call, Kingsley, you have to tell us now, how can financial literacy help individuals to make better financial decisions? Because as you've been explaining here, it's not just about making the decisions. You can make a decision that will cause you pain. So how can this thing you're discussing here now just help individuals if they're deciding the decision has to be a better one?
Thanks. So it's again, it's the bedrock for decision making. And again, it doesn't also mean that because you have a PhD in finance or economics, you may not make one or two bad investments. So but what you could use to console yourself is, at the time you made that decision and all the information that was available, did you make the right decision, right? And to be able to analyze and assess, all the options available, you need to understand just the basics. Now, so you're deciding, okay, you want to save towards some goal. You want to say buy a car after 18 or 24 months. What type of product should I put this my hard-earned savings with? How difficult it is now to set aside money, right? With inflation that's going through the roof. Now, if you don't understand that, okay, the money I'm setting aside, yes, it can earn interest, but in 24 months, would the price of the item today be what it is in 24 months? Probably not. Definitely. I mean, not in this part of the world, right? So that whatever interest you're looking to make, it's very unlikely that would match, what inflation would be. So you need to think that, okay, this, saving scheme I'm trying to do, is it probably the best investment? But yes, it's short term. It's 24 months. So you don't have a choice, right? But just understanding that, okay, if a particular, investment product is offering, say, 10% annually, right? What does that mean for this money I'm setting aside every month? Or another product is offering 9.75% compounded monthly. What does that mean for this my investment? Also, in terms of just, exploring the basic products, that are available to you, to make that investment, nothing complicated. You just need to understand that, okay, how does this business even make money, right? Because sometimes people tend to separate, investments from common sense. Somebody will tell you, bring your money, we'll double it for you
in hours.
In hours, or some people in months, and they'll say, this one is true because my brother or my neighbor just got money from it. So it's not 419. But they don't understand that, okay, the business itself, is it making that type of money, to double your money and give you back? Probably not. So the money that they are paying you from is another person's money, which is what we call, a pyramid scheme, right? And I've seen even people that are working in finance institutions, put their money in this type of places, because someone else, made money, and they've made money in the past. They know it's risky, but they just hope that they never get caught in the web. And when they get to lose money, they don't say anything, because they'll say, you are a senior manager in the bank and you put your money in a particular business that was saying they're going to pay you 20% every week. What were you thinking? So, back to the question, it just provides that good, foundation, knowledge base for you to be able to assess, approach investment, finance, and decision making with the right skill set. So just like a doctor, would assess a patient, They will do blood work, they will do their temperature. Doesn't necessarily mean, the doctor may not make a mistake in the prescription, but they have the basic skills, and they're doing the right basic things, just to be better informed and to understand, what the patient's complaint is.
Okay, we have messages coming in here. You can send yours to 0817-313-6193. That's WhatsApp portal. You can also record a voice note and send there, or you can call us on the telephone 0700-923-923-923. That's 0700-923-923-923. I'm a small business owner. This person said, a small business owner like me. Good evening, Captain Smart and our guest, Mr. Kingsley. Please, I need more clarification on the topic and how a small business owner like me can benefit from it. And that's Adeshola from Lekki. And this person also says, good day, I am Matthew, Gospel Blessings from Lagos. I'm so happy to get in contact with you. Thank you very much. And then this voice notes right here.
Hi, this is Dr. C here. Please, I would like more explanation on this compounded interest and the annual interest. So say some instrument is 10% interest annually, and another one is 9% compounded interest. Can he just explain what these mean in details? And I believe that I don't know of any investment at the moment that is at par or even above the current inflation rate. Maybe because I'm financial illiterate, married to a financial literate husband. But yeah, I would like to know so that we can be advised. Thank you. So we know which one we're putting our money in. Thank you.
All right. Multiple questions there from Dr. C.
Yeah.
And this other question here that says, is a small business owner, how can they benefit from what you're discussing now? So those two very quickly.
Okay, so for let's start for a small business owner, right? So two things, right? You may need to access, financing to finance working capital. A small business owner, you may not have access to, say, the big commercial banks to provide you working capital support. But with the advent of technology, a number of fintechs offer this product, right? So you should be able to analyze, say if they're giving you, say, a 30-day loan, at 6%, payable every month, versus, some other longer term thing that might be a more appropriate for your type of business. Now, people might want to argue that, okay, given that you don't have access to the ideal, you may need to take what's available. But there are times that it might be better not just to do nothing than to get burnt and you borrow at exorbitant rates that will wipe out not even your profits, but in some cases your revenue. On the surplus side, you may have excess cash that your business is spilling over. You need to know how to invest it in something safe, and to basically be able to understand or interpret what some of this, again, financial institutions are offering you in terms of yields or monthly returns, and how that would ultimately affect your desired cash position, to be able to grow your business to those levels you're thinking of, right? So again, it's most of us get to do these things ourselves. Some do it through people, and it's fine. It's just that we want everyone to be in a position that they have that basic knowledge. They can calculate interest rates. They can understand why a more frequent compounding is superior to annual compounding. They can understand the impact of inflation on their money or their investments. They have some basic understanding of what investment products are available out there. Is it a fixed deposit savings? Is it something deeper? Is it investing in the bond market or the FGM bonds, or is it even going down the risk chain, investing in equities? Just understanding what the risks are, and just knowing, okay, these are the potential returns I could get from this investment, and I'm trying to align that to their own individual, investment objectives. Like I gave an example of, no matter how good an equity investment is, it wouldn't make any sense for me to put school fees money that is due at the end of this month or next month in any equity investment, because equity is long term. It could go up and down, right? What I should be doing is maybe putting it in a 30-day placing, even if I'm going to get 1 or 2% for that month. It's better than nothing.
All right. And another question here says, Mr. Kingsley, thank you for all your explanations. But why do the so-called legitimate investment houses give small percentage as returns? Does it not amount to tying down someone's money down for the long term?
Okay, good question. Now, don't forget that these investment firms, are essentially playing, an intermediation role. So, whatever funds they get from you, right? Yes, they will give you something, but they are going to also invest that in a similar type of product to ensure that there's no mismatch. So if they take money from you for say 90 days, right? Any sound investment house would also place that money, with minimal risk for 90 days, right? So they can't pay you so much because they are only getting so much. So they will make a spread from you. So it's simple to them, just the way if I want to buy dollars from an aboki, he's going to ask me whether I'm buying or selling. And he will tell me that depending on whether I'm buying or selling, he will give me a rate. The difference is a spread, because he can't be buying. What he will say is that I can't be buying something and selling something at the same price. So that low rate they are giving you is because what they can invest it in, ideally at those commensurate tenors and risk profile, has to be commensurate. I know some people do mismatches, right? They take money short term and they put it in high risk products. It could pay off, but that's not good investment practice, because people could lose their money. And we have people today are chasing people. Some people took money for 90 days and went to invest in real estate, and then telling you come tomorrow because they've not been able to sell down to pay your money. And then there's the effect of people calling them out on social media, and even that real estate that they invested in, they end up losing it. So you don't want to be exposed to those type of sharp practices.
Wow. Don't forget, you can call 0700-923-923-923, or you can call 0802-054-4484. So how does financial inclusion then differ between urban and rural populations in Nigeria, and what can be done actually to balance it out?
Great. So we in the urban areas, we have access to a lot of financial products, ranging from the regular current savings account, to more sophisticated products like money market, investing in bonds, and even outright buying equity, right? Those in the rural areas, they probably don't have the same level of access, but technology is helping. So even if I'm in my village in Edo State, as long as I have access to the internet, I can access some of these products, right? But even beyond just having the access, it's also important that we scale up the level of, financial literacy, right? So the fact that I have access, to, say, for example, the FGN is doing a domestic Euro bond. To invest dollars. I probably won't have dollars if I was sitting in my village anyway. But the fact that I have access to it, I need to understand what type of product that is. If I'm investing in it, what type of risk am I taking? And that's where the point of education, be it urban, rural, right? A lot more work should be done in the rural areas, because the access is limited, and even those that have the access have very limited knowledge. So that's how it differs. So urban areas, increased access, higher level of literacy, but on both sides there's still a lot of work to be done, to sort of improve those numbers in terms of financial inclusion.
Let's talk about technology, Kingsley, and the role it actually plays in promoting financial inclusion, particularly with mobile apps and online platforms right now?
Good. So everyone, especially in urban areas, we all have, or most people have, mobile phones. The last time I checked, there are probably over 200 million mobile lines across Nigeria. So a lot of people have more than one line, but even if you make that adjustment, that still shows a very high penetration level, right? So we're doing very well in terms of access to mobile data. Now, in terms of the online bit, again, quite a number of this access also driven by smartphones. So most people have access to the internet. Maybe not 24 hours, but at least they have access to the internet, and they can access the internet, for the right information. So what that means is, because of this access, that can drive financial inclusion, because these products are now available to a wider reach of people. So maybe 10 years or 15 years ago, before somebody can have a savings account or whatever bank account in some remote village, somewhere in Nigeria, the bank or the financial institution would have to go physically there and set up a branch, right, or a rep office, which was capital intensive, and that just limited the access some of those people would have to financial service. But now, with your mobile phone, you open bank accounts. They're very popular ones that everybody's using. That's like their phone number, right? So things like that, yes, it comes with risk, but it is just broadening the access to financial services, even if it's just at the basic level, right? So people, especially in this part of the world, you'll be shocked, move around without cash. Even in some more advanced markets, our own level of technology is, you'll be shocked, is even higher than some people in some areas in the West.
Wow.
And you want to commend what the central bank and a number of regulatory authorities have done to deepen financial inclusion through the use of technology. Yes, it has come with its risk. People have lost money. The level of scamming and all that has increased, but broadly speaking, the access has increased. I was in the village last year for my dad's burial, and I was paying vendors, through transfers. They all have the popular
in the
one I
village.
mentioned. Yeah, in the village, right? That probably wouldn't have happened, maybe 10, 15 years ago. I would have to have gone with a bag of cash, to the village, because that's only what they know. So yes, it's technology, and that means that there should be that consistent and deliberate effort to consistently invest at least in maintaining the telecommunications infrastructure, broadband access, and that would have multiplier effects on even the country's GDP.
Well, time has caught up with us. We were going to have to leave you there. It's been a wonderful session here, talking about promoting financial inclusion, and Kingsley Aigbe has been our facilitator tonight. It's been quite a lecture, I can assure you. You can continue the conversation on www.cfasocietynг.org. That's the website, or follow on all the social media handles, from YouTube to LinkedIn to X, and on Facebook as well. You get answers, and continue the conversation right there. Kingsley Aigbe, CFA, thank you so much for coming on the program this evening. We appreciate you and your time.
You're welcome.
Yeah, that's our program. Join us again next time. Till that time, remember, you need financial literacy if you are going to enjoy financial inclusion.
Thank you for joining us on this episode of Money Talks, hosted by the CFA Society Nigeria. Stay connected with us on Instagram, Facebook, LinkedIn, X, and YouTube at CFA Society Nigeria. Follow us for more financial insights and updates. Keep a date with us next time.